The unaffordable Arizona housing market, what it looks like now if you are a buyer trying to buy a home right here in Phoenix Metro. Now, in some other videos, I've talked about this and compared 2019 data to current data and what that looks like as far as monthly payment goes. And it just had me thinking. It brought up some other conversations of, you know, how would that feel if you are a new buyer, maybe not even a new buyer, maybe a second home buyer coming here from another state where your average sales price is much lower, and what that looks like for the future and what we are going to see, at least in the short term, for real estate here in Arizona. Welcome back to the channel. It's Rich Brecklin, your Arizona real estate agent with Real Broker. So I'm going to share with you some data, some numbers, not necessarily my beliefs or thoughts, maybe a little bit, but just some data because the numbers don't lie. Now, I'm not one on predicting the future. I like to look at trends, and we can only look at so much, some leading and lagging indicators, but there are some key metrics I like to pay attention to, and I have over my 10-year real estate career, and to at least be able to educate and inform my clients and let them make the best decision that impacts them and their family when it comes to deciding, should we buy, should we sell, what does that look like? So right now, our average sales price is around $530,000. So I get it, that is high. Median of around $417,000. Both of those numbers are up from last month and last quarter, despite what the media, social media, whatever is going to tell you. And yes, rates have gone up. And I've mentioned this in other videos. And, most people would think rates go up. Well, surely the demand is going to fall and prices are going to follow suit. And yes, however, right now it's weird what we're seeing in Arizona. It is not quite that. There's more to this equation than just the simplicity of interest rates. And I mean simplicity of rates being simple, because with the whole systemic bank failure and who knows what other bank failure is going to be next, that's causing a whole nother mess of problems and guessing game when it comes to rates. But here, this right here is my MLS. This is what I look at every day, and these are your active single family detached homes. Now, you look at this number, may not have any context for you, but at one point in the fall, when we really saw a pause on buyers, that number was over 17,000, and we have been on a downward trend ever since, falling. So it's down a few hundred from yesterday. And I'm going to show you what I'm talking about. And you look at active listings. And this is taking all active listings, not just single family detached, but it's following that same trend line. So in February, 15.5 jumped up. And then we just seen that steady, path downward. And that is helping keep prices in check, or not in check, but expensive. And I get it. It is expensive to buy a home here, especially from where it was 2.5, 3 years ago. And when it peaked at on $600,000 on average, a lot of people are like, how long is this going to last? Now, thankfully, it did fall back and it has gone down, from 600 to 530, and actually dropped down to 510. But now it has gone up, especially when we had some lower rates into December, into January, and we're seeing the effect of that. Now, when I talk about leading and lagging indicators, some of these are lagging indicators we're looking at, but what do I like to look at when it comes to some leading indicators? Now, it goes on to a lot of different things, but listing success rate. Now, again, that is not leading indicator, but again, I like to follow the trend. So back in February, we were 68%. At one point, we were below 60. Now, 65% of listing success rate is the balanced market. So we have gone above and we're nearing 80%. Now, again, this is something I'm going to pay attention to, especially as people get maybe I don't say accustomed to, but maybe they're putting the brakes on with what is happening in the world, in the market. And we'll start seeing if that starts to fall, then that would definitely be a trend we're going to look at, especially when it comes to pending listings. This chart here talks about the price per square foot. Again, I'm not so worried about the numbers as I am the trend. Now, again, it peaked at around 304 in May and June, and then it started to fall when interest rates rose. We all know that, and that is expected. As it continued that downward trend until January, December, when it started to go up. So it was at 264, and we've seen a steady trend upward. Again, lagging indicator, these are of closed sales. Now, when you look at appreciation from last year, now we do have a negative appreciation there, but I remember we saw peak prices. So that is not unexpected. However, if for the buyers out there who saw the fall and we're still waiting for it to fall, because let's be honest, the prices these homes are at today are still really darn high from where they were a year or two ago. Not necessarily a year, maybe 18 months to 30 months ago. They're still high. And you look back to 2019, they're way too high. Your monthly mortgage for an average sales price with that average rate then to now is double. So they're high. And again, what does that mean for a buyer? How long do you wait? Do you wait for home prices to fall? And then how long do you wait? Some people have that luxury of waiting, but some they don't. Like my clients, most of my buyers all come from YouTube, and they're all relocating here for new quality of life or for work. They don't have time, nor do they want to wait. And they're looking at, all right, what does that monthly payment look like, and can I afford it? And if you're wondering, well, how much can I afford? Just quick math, quick rule of thumb is 28% of your monthly gross income. Gross. So just use that calculation. But again, if you need a lender to talk to, I'll put you in touch with some great ones. One of my lenders just got a great client under contract who's moving here from Kansas, and they got under a 6% rate, even though rates are at 6.5%. And then speaking of lower rates and different incentives, so there's some different strategies you can use to get into this. Again, depends on each situation because they're very different, especially with lower inventory. But with builders and with their inventory homes of quick move-ins and homes that are going to be finished in the next few months, a lot of them are offering incentives. I have a client closing soon, and they got a 4% concession from the builder's lender and $40,000 off of what they originally wanted. So they got a great deal. They got a low rate. Another client in a new build, they got locked in at a 4.99 on a quick move-in. So there are ways to get you a low rate. There's also, seller concessions, but those were running hard. But now with lack of inventory, and if a home is priced right, that home is selling. It's the homes that aren't priced right, the homes that look awful, that have clutter and junk and not taken care of, and they're just trying to see what they can get. Those homes are sitting and sitting and sitting. So those are the ones you see coming off the market doing large price reductions. But if you can get a seller concession to buy your rate down, that is great. But again, it's a case by case basis. As always, I like to look at this chart. I look at it daily to see what is going on in our market. And I look at listings under contract and pendings, and both up from last month and last quarter. So just a trend, the most up-to-date trend I can see other than what we actually experience in our market. So when you look at closed sales, that's something that went under contract sometimes 30 45 days ago, and the market was different then. It's always changing. And also real estate is hyper local, so depending on where you're moving to, if you're looking in Queen Creek or Goodyear, completely different markets, and there's going to be some different situations there. Same with neighborhoods. So again, don't buy into what big media is telling you, whether good or bad. I like to look I look at the numbers. They are what they are. I don't get attached to it, married to one idea. And I'm also willing to change my mind. If I believe something and I think that, I don't want to get confirmation bias and just think that is how it is. So that's why I like to just look at the numbers, let the numbers tell the story, look at the trends, and advise my clients of the same. So that way, again, they're taken care of. Because at the end of the day, a lot of people are buying a home no matter what the market does. But if you can have as much information possible so you can make the best decision, then that is going to benefit you in the long run. If you're looking to move here, have questions, reach out. All my contact is in the description. Watch this next video, and I'll see you next time.